السيد اسكندر نجار المدير العام لشركة الباري التي تأسست عام 1998. لحظاته السيد اسكندر موجود. تفضل سيد اسكندر. السيد تأسست شركة الباري عام 1998، لها ما يقارب 35 مكتب حول العالم، و أحدث مكتب لها هو مكتب الشرق الأوسط، وتعتبر أكبر شركة بروكر تتعامل مع الشركات المالية مع أكثر من 440 ألف حساب، ومحاضرة بعنوان تدخل البنوك المركزية لدعم العملة والنتائج المترتبة على ذلك.
Fiscal spending causes fiscal deficits. So in the long run, you're dealing with the solution short term, but in the long term, you're increasing your deficit in the market. By increasing your deficit in the market, it has an adverse effect on the economy in the long run. So trying to emphasize that, yes, it's a good short-term solution, but for how long? I'll also go into emphasizing how long it will work as a short-term solution. The next point here الطرق الثانوية لتخفيض قيمة العملة، السياسة المالية المتراخية والتخفيف الكمي اللي شفناه recently مع quantitative easing, loosening your monetary policies, loosening your fiscal policies as well with your interest rates. In this way, you're not opening it up for a free market. What you're doing in these cases is you're manipulating the markets with the powers or with the tools that you have. Now, quantitative easing is very direct. Fiscal policy, monetary policy changes is indirect, but in essence, the objective is exactly the same. Now, how do يمكن الحكم على فعالية التدخل عبر قياس التغييرات القصيرة ومتوسطة المدى الطارئة على أسعار العملات في تداولاتها الفورية. So the impact of the intervention is measured in how much it's affected the currency rate and the currency devaluation, if that's what the economy is looking for. And this is key by analyzing your graphs. We'll go through a couple of charts later on the yen, on the Swiss franc, to emphasize the impact of how well it will do, because it varies economy by economy. It varies country by country. It varies situation by situation. And the more so you use it as a tool, the less effective it becomes, because from a speculator's point of view, it's something that you can read very much into the markets. Now you have two types of intervention, which is unsterilized and sterilized. Now, unsterilized, you inject money into the economy and you don't adjust your balance books. So it's pure liquidity into the market that's not weighted in any other way. Now, countries such as the US can afford to do that because the world's addicted to the dollar. So no matter what you do to the dollar, people are continuously trading it. It's the same with the yen to a certain extent. But you tend to find economies who will try to use unsterilized measures and it'll have an adverse effect. Sterilized measures is when you increase money supply in the economy, at the same time you adjust your balance books. So you're countering it to a certain extent. Now obviously the impact won't be as strong, but at least you're controlling the impact of the intervention. An example of unsterilized intervention which had an adverse effect is Zimbabwe, where we witnessed inflation rates of 10,000%. They were trying to increase money supply, trying to boost the economy in a certain way, but at the same time, the adverse effect was inflationary pressures that were tremendous to the people. Now, in terms of intervention and central banks' reason for intervention, في عندك التدخل الدفاعي والتدخل المندفع. التدخل الدفاعي, let's say with the yen, if the Bank of Japan is not doesn't want to touch the 80 levels, it will intervene in order not to touch the 80 levels, which is one form of intervention. Now another form of intervention, al-mundafi', is aggressive intervention, which is called. Let's say they're at the 80 levels and they want to target the 85 levels. So it's whether you're targeting it or whether you're shying away from it. The measures are the same, but you will have intervention reasons for different reasons. economy by economy. هاي دراسة حالة في اليابان. It's very interesting. مش عارف إذا مبين عندكم كتير. But what we have here is continuous intervention in the early 90s with Japan. I'll go through this example, then I'll go through an example which happened in 2003, 2004. But to give you an idea of what I'm trying to emphasize. Intervention works in the first instance. It has an impact in the first instance. It has a lesser impact in the second instance for reasons based on speculators reading into what will happen to the economy, the lesser impact that people know what way you're targeting, because you'll tend to find institutions always work against the central banks. The bigger players, what we tended to find with our clients, whenever there's an intervention, they go towards the central bank. They go in the same direction of the central bank. What I want to emphasize here is the actual position, the best way to go is go against the central banks, because that's the long-term route to the market. Now, what I have over here, I'm going to point out intervention. I'm going to point out the volumes of the intervention and the way the market moves. Okay? So, we have points of intervention here, which it's in August 1993. The price was at 114 levels, I believe. And what tended to happen, you had 200 billion injected into the economy. Now, first instance, it survived it. This is January 1994. But as you can see, it didn't last very long. Now, they had other boosts of intervention at 50 billion levels, more frequent, it was happening. They reached up to 100 billion, and it still couldn't survive. The long term, yes, you have a short-term impact, but the long-term impact is a downward effect. So the long-term impact that we can see is a downward effect on the, let's say, appreciation over the yen. Now, what the government is trying to do, what the central bank is trying to do, is to devalue the yen. But on the long run, it's working against them. And what's very noticeable, these are the 114 levels. It came down to the 105 levels at some point. They intervened again, 100 billion injections. As you can see, the interventions became more frequent, and they even reached $300 billion in March 1995. So what we're trying to emphasize is the short-term solution. It doesn't work in the long term. It happened again. They touched 100 when it was touching the 89 levels down to here within 1 year. They intervened, injected 300 billion. After that, they stopped. They realized that it wasn't working. It took them 2 years to realize it. And then natural trends in the market allowed the yen to come back within a year to the 114 levels when they stopped intervening into the market, which is something that we're witnessing again today. Now, this is a graph the same. If anyone would like a sample of this graph, we can send them to you. Pass by our booths and we can take your details and forward it on to you. It's very interesting theory. I'm not sure if you can see it as detailed, but as volumes increase, you'll tend to see it works against what the central bank is looking for. And it's something to bear into account next time you hear about an intervention. Stay out of the market, because it's very illiquid at that time when people are expecting interventions. But enter the market in the opposite direction, and you'll see what the long-term impact of that is. Now, what I want to emphasize is why it works against the bank, how it impacts them, why we tend to see the markets moving against the direction that they want. Now, large volumes of USD sell orders sprung not long after the start of Japan selling intervention in both 93 and in 2003. We tended to see speculators reading into the market, reading into where the opportunity lies. Now, while talking about speculators, I'm mainly talking about the bigger players in the market, the institutions, the treasuries, the funds, who have their own agenda and work on that agenda. And it's something to bear in mind, because we tend to see our clients moving towards it. Move in the opposite direction, and I think that's where the opportunity lies. Now, as I'd mentioned, reason why it becomes very predictable, very tradable. A client will tend to realize what price the central bank is not moving against, so they start trading against that price. Now, I'm going to take an example in Switzerland where they were trading against the 150 levels. Once they tried it once, it worked well, they broke the resistance point. Once it hit those levels again, there were plenty of orders in the market that had a greater impact than the intervention itself. Now, lower volatility Bouts of intervention are usually accompanied by lower volatility, allowing larger market participants to avoid trimming large positions. As I'd mentioned, people tend to shy away from the market when intervention is there because they're not certain in which direction it's going to go, especially in the second instance or the third instance. Now, as people try to shy away from the market, as it's lesser liquid, the bigger players have a more impact onto the market, which is you tend to find them able to control it in one way or another. Now, higher liquidity, central bank interventions creates ample liquidity. Intervention in 93 and 2003 was accompanied by cheaper US dollar. Liquid markets attract speculators, which adds to burden facing central banks. As you intervene, you're attracting more speculators towards your currency. Central banks tend to not to enjoy speculative activity because you have lesser control over your currency. So it's something to bear in mind. Yes, you're trying to heal a wound, but you're just putting a plaster on it as opposed to healing it properly, because it's always going to be there, and it's going to get worse and worse and worse unless you cure it in proper ways. The psychological impact, when people know that there is a target, they tend to aim towards that target because it's more easily hit. So when you hear about interventions, you're paying more attention towards that target. It's something that's more interesting to work on. Now, the side effects, the side effects of artificial intervention. Now, weaker yen tends to lift Japanese stocks. Now, you'd think central banks would enjoy the fact that Japanese stocks are appreciating in value, but actually it's in contrary. Reason being that it's artificial. It's not real economic growth. It's not real evaluation, because it's just speculative in nature and it's not being read into the markets. So it's something that to bear in mind for the future. Higher fiscal deficits. As they intervene, they're borrowing in order to inject. The fiscal deficit is something that they have to burden in the future. Floating FX loss. If you're buying euro at the 135 levels or the 140 levels and the price is at the 120 levels, you have to burden that cost as a central bank. And it's something that's held on your books. Yes, sometimes the market will go in your direction, but even if it does go in your direction, it's not the central bank's objective. They're not looking to speculate. The Ministry of Finance comments are usually more receptive compared to Bank of Japan. What's tended to happen in Japan is the Ministry of Finance have started to intervene more so than the Bank of Japan. So the power or the impact of the intervention is far stronger from the Ministry of Finance than it is from Bank of Japan. This is in Japan in specific. It tends not to happen in other economies. Intraday volatility can seriously damage short-term trading strategies. The volatility can impact strategies in many ways. So if you're going in and out on a highly volatile market, it's going to have an adverse effect. Now, in conclusion, artificial intelligence rarely works. It causes small spikes, which is what we've seen over here. The markets will move in a direction, but it won't survive it. It has an opposite effect, from what I can see from the charts that we've seen. So it doesn't deal with the root of the problem, as I've mentioned before. It just covers a small part of it. But you need fiscal policies, you need monetary policies to control your government. And you need those controls to be measured with the people around you, with the economies around you. Because if they're working against you, if you do intervene and their policies or their objectives are contrary to what you're doing, then you're just putting yourself in more debt with less intervention, because the market is moving in one direction. Now, the next one is something more recent. It's something what's happened with the Swiss franc in recent times. Now, the chart is looking at the 2009. The first intervention happened on the 10th of March, 2009. You can see the initial spike. It worked in favor of what they wanted for the initial intervention. But I've circled here the different moments of intervention. I mentioned the first instance of intervention has a strong impact. The second instance has a lesser impact. And the third instance, as we can see, has an even lesser impact. What we're looking here is the 150 levels. Speculators started to read into the 150 levels. So the moment that they saw the first intervention, which was confirmed in their second intervention, the moment that it touched the 150 levels, it broke through and came down to the 142 levels, which is where we are today. So it's something to bear in mind. It's an interesting opportunity in the market because we're continuously talking about interventions, People are having continuous lesser impact on how they can control. Important currencies is the dollar yen, the dollar Swiss franc, the euro Swiss franc, the dollar Brazilian, and the dollar won as well. You're going to see there's talks of intervention coming through with them. Take these in mind. Have a look at the long-term impact. Test it yourself. Read into it yourself. Obviously, my advice is always test the markets yourself. Read into it more so. It's just something that I wanted to point out for everyone to consider the next time they hear of intervention. It's an opportunity, but it's not as clear of an opportunity as it appears. Study it, take it over the long term, and the profits will work on your side. But there's plenty of information out there. If you want to discuss it more, I'm more than happy. We're at the stand with ALPARI. And I hope that's clear. If anyone has any questions, anything you'd like to delve into, I'm more than happy to open it for discussion. Thank you.